Good morning, students. Let's we do the chapter number 4, that is conversion or sale of partnership firm into limited company. So semester 3. So today we are going to see very important objectives on this topic. You know that question number 1 always on objective question. So in this case you will find that 20 marks objectives. So there are two sets, A and B. In A, you will given 12 objective, you have to solve any 10. In B, you are given 12 objective, you have to solve any 10. In this case, they may be asked multiple choice question, true and false, match the column, and maybe fill in the blanks. So out of these 4, any 2 can be asked. So let's we do very important objectives on conversion or sale of a partnership firm into limited company. So let's see the first objective. On sale of firm to a company, the purchase consideration is calculated by dash. So net asset method, pure capital method, excess capital method, and surplus capital method. You know that in conversion of firm or sale of partnership firm into limited company, whenever the PC is given, that PC calculated by 3 methods. First is a net asset method, second is a lump sum asset method, and third is a payment method. So out of these 3, only one method is given here, net asset method. So our answer is net asset method. Now 2. 1A. On the sale of firm to a company, the purchase consideration is calculated by net asset method, payment method, lump sum method, and all the above. You again same repetition here, that in case of conversion or sale of a partnership firm into limited company, there are 3 methods of PC, calculation of PC. First is a net asset method, second is a payment method, and third is a lump sum method. So all 3 methods we have to do under this conversion or sale of a partnership into limited company. So that answer is all the above. Now third, shares or debenture received from a company on sale of a firm are distributed among the partners. So specific ratio agreed by all partners, and excess capital method as per the quotient capital method as per the surplus capital method. So in this case, whenever the PC given to the partnership firm in the form of the shares and debenture, that is always divided in the specific ratio agreed by all the partner. So answer is the first, specific agreed by all the partners. Next objective, shares or debenture received from company on sale of firm distributed among the partners. There may be specific ratio agreed by partners. There may be equitable approach in the ratio of capital approach, and any of the above. So in this answer is fourth, or any of the above, because whenever shares and debenture given by the limited company to the firm, that is always divided in specific ratio, sometime equitable ratio, and sometime ratio of the capital. So answer is any of the above. So next one, in equitable approach, first equity shares are divided in proportion ratio, preference shares and debenture are divided in the ratio of capital, both A and B. So answer is A and B. In equitable approach means what? Whenever equity shares given to the firm, that is always divided in profit sharing ratio, and preference shares and debenture always divided in the capital ratio, and that is known as equitable approach. This is very important. This can be asked for the short notes. So we have 3 approach. First specific ratio, third second equitable approach ratio, and third is a legal approach ratio. Legal approach. So we have third approach here. First is a legal approach, second specific legal approach, and third equitable approach. So here answer is a C, A and B. After that, dissolution expenses paid by a company to the firm on conversion are dash. So answer is credited to goodwill account. Why goodwill account? Because this is paid by whom? Company. And whose expenses? Firm expenses. So this actually should be paid by the firm, but this is paid by the company, and therefore this is a expense done by the new firm, and therefore this is credit to goodwill. So answer is debited to goodwill account. Answer is debited to goodwill account. After that, purchase. So these are the multiple choice object. Now we will see the objective on conversion or sale of partnership firm into limited company, true and false. So let's we understand the statement. Thereafter we discuss the question and give the answer question. So first, equitable distribution of purchase consideration amongst partner by firm on conversion would mean division of preference shares in share in profit sharing ratio and debenture in the ratio of partners capital. So answer is wrong. Why wrong? Because we always divided the equity shares in the profit sharing ratio, not the preference shares. Preference shares and debenture always divided in their capital sharing ratio. So answer is false. Second, equitable distribution of purchase consideration amongst the partner by firm on the conversion would mean division of debenture in the profit sharing ratio and equity shares in the ratio of partners capital. Again answer is false. Why? Because equity shares always divided in the profit sharing ratio, not in the partners capital ratio, and therefore answer is a wrong. So therefore answer is a false. Third, equitable distribution PC purchase consideration amongst partner by firm on conversion would mean division of equity shares in profit sharing ratio and debenture ratio partners capital. Yes, answer is true, because debenture and preference shares always divided on the partners capital sharing ratio and equity share always divided on profit sharing ratio. So here answer is true. After that we come to the fourth one. While calculating the purchase consideration on sale of business to a company, firm deduct all external liabilities payable from market value of all assets whether taken over or not. Answer is false, because whenever the PC is given, PC always amounts coming are those amounts which are taken over by the new firm, and which are not taken over by new firm, that never appear in the purchase consideration. In short, जितना लिया है न्यू फॉर्म में उतना ही का पैसा मिलेगा, और जितना एसेट नहीं लिया है उतने का पैसा मिलने वाला नहीं है. सिमिलर टू द एसेट आल्सो. सो दिस स्टेटमेंट इज अ फॉल्स. आफ्टर दैट, conversion into limited company, firm receive purchase consideration from the companies for sale of business. So conversion into limited company, firm receive PC from the company sale of business. Yes, answer is true, because new company taken over by the old company, that's a firm. So firm will get the purchase consideration from the new company. So answer is true. After that, conversion into limited company, firm purchase consideration to the company for sale of business. So in this case answer is a false. So firm will not pay, firm will be receive the money from the new company. So firm are going to receive the PC from the new company. So firm will get the PC from the new company, not firm will pay to the new company. So therefore answer is a false. After that, conversion of firm into limited company, all partner of the firm automatically appointed sale of a business. So answer is false. So all partner of firm cannot become automatically appointed by sale of business. There is a procedure for that. So answer is a false. After that, on conversion of a firm into limited company, partners of the firm can become a director in the new company. So answer is a true. So old firm partners can become a director of the new firm. After that, on conversion of firm into limited company, partners of the firm become a manager in the new company. False. So firm, all the partners which are in the firm, they cannot become a manager of the new company. So answer is false. If the purchase consideration is more than the value of the net asset taken over, the difference credit to capital reserve in the books of the company which has taken over by firm. So answer is a false. So after that, sale of firm to company, cash and bank account are transferred to the Reliance account even if not taken over by the company. So answer is false. Whenever the cash or bank is not taken over the new firm, we open separate cash account. Okay, and we tally that particular account in case of conversion or sale of a partnership firm into limited company. Now after that, if the shares received as a purchase condition on sale of firm to the company are to be distributed equally, comma, equity shares are to be distributed in the ratio of partners capital. False. Equity shares always divided in the profit sharing ratio, not in capital sharing ratio. Therefore answer is a false. According to section 48B Indian Partnership Act, share received on sale of firm to company should be divided among the partners in their profit making ratio. False. So answer is a false. So whenever share received to the firm, this should be divided among the partners in the profit sharing ratio. Okay, therefore answer is a false. So these are very important objective on the conversion of firm. So all the best for your exam.